There's going to be a chance for more chit-chat and networking at lunch after the interview with President Santos. And there is going to be a lunch hosted here in the hotel. The Bolsa de Valores is the host. Finance Minister Mauricio Cárdenas will be speaking. And afterwards, there is a panel made up of private sector members of the energy sector. So, rolling schedule. The next panel is about the more financial side of investing in Colombia, and moderating the discussion is my colleague Jonathan Wheatley, former bureau chief in Sao Paulo, and now based in London, where he is deputy emerging markets editor and keeps a close eye on the region from there at Beyond Bricks. The FT's emerging markets blog, very well read, and I'd recommend that you check it out. So over to Jonathan.
Good morning, everybody. Thank you very much. Good morning. Thank you, JP. Thank you to the organisers for inviting me to moderate this panel. It's a pleasure and an honour to be here. Very pleased to see such a packed and apparently enthusiastic audience. We're going to have about an hour to talk about the role of capital markets in Colombia's economic prospects. I will ask each of our guests to say a few words. I may ask them a question or two, but what I'm most interested in is opening questions to the floor. That's where the best questions generally come from. We journalists tend to be a bit anodyne sometimes, so we've got some sharper questions that quite often come from the floor. But let me introduce our panelists. On my left is Juan Pablo Cordoba. He's the head of the Colombian Stock Exchange and one of the driving forces not only behind that exchange, but behind the consolidation of the Pacific Ring exchanges into MILA. With no doubt you're familiar with that. If you're not, we'll be talking about that a bit. A lot to say there, I think. David Bojanini is beside him on the other side, head of Grupo Sura, one of the biggest conglomerates, financial conglomerates in Colombia, part of the GA Sindicato. Who can talk to us about the role of capital markets in formation of Colombia's big groups. It's multi-Latinas expanding around the region and beyond. And then beyond him is Roberto Junguito, head of the Association of Insurance Companies, also a former board member of the central bank and various other roles in policy, including at the IMF. So we've got a macro view there. I would like just to start off, Juan Pablo, with perhaps a few words about consolidation of exchanges, their role in Colombia's economy at the moment.
Okay, well, thank you very much, and thank all for being here. I'm going to start by sharing an obsession that I personally have and that we share at the exchange, at the Colombian Stock Exchange in Colombia, and that is to make the capital markets relevant for the economy, to make them, or to ensure that they remain relevant and that they serve the country well. This may be a very general declaration, but it's something that drives us every single day, making sure that Colombia is competitive. And a message here is that the competitiveness of an economy is done precisely by the private sector. The government sets the rules and enables an environment for business, but it's really the private sector that becomes competitive and thus makes an economy competitive. And the cost of capital is very important. It's very important for competitiveness and particularly for the growth strategy and internationalization of our corporations. So ensuring that our capital markets are there, serving the economy well, is very, very important. In that light, our strategy has two main areas of focus. One is to have a high-quality market, and I'll touch on that a little bit, and to make our market much more international. So the two messages are high-quality market and an international market, or a much more international market. In high-quality market, of course, there's the enabling regulation, permanent discussions with the authorities, very good reception in the government to promote. It's a very pro-business government. I think the evolution of regulation in Colombia is going in the right direction. We can consider to have world-class standards in terms of operations of the capital markets, and always a very open authorities for this discussion. And there's, of course, always room for improvement. But for example, we had recently a tax reform that has made the Colombian capital markets even more competitive internationally. It's a capital market that has no capital gains on equity investment, for example, for international investors and for local investors. This is very important to consolidate the growth of this market. And also in the recent tax reform, a reduction in the tax regime for investing in derivatives and fixed income securities was very important. So very good regulation. We're working with companies to enhance standards, corporate governance standards, information disclosure, investor relations, etc., to remain a high quality market. And on the international front, we believe that Colombia has to have more access to capital from outside. And that's why we've initiated, initiatives like this one, being here in London, meeting with the investment community and getting the story out of what Colombia is all about is very important. But also the MILA initiative. MILA is Integrated Markets of Latin America. It's an initiative by the 3 exchanges of Colombia, Peru, and Chile, 3 countries that are leading growth in Latin America, and that we believe that as more economic integration takes place, also financial integration has to take place. And I think MILA has made a very important step forward in enabling financial integration in Latin America. It is the first real experiment of financial integration that has been achieved in Latin America. Of course, it's a step-by-step process. It's a long-term initiative, but we have made the very important first step, and I think there is the commitment of the governments of the 3 countries to support this initiative.
Is it working? Is this a capital market that provides you with the finance that you need?
Well, I could say it works, and it works very good. In our case, Grupo Sura, in the year 2011, we made a large acquisition in the region, becoming an important multi-Latina. We acquired the ING assets in Latin America, participating in 5 countries, Mexico, Chile, Peru, Uruguay, and Colombia. And this was a big operation for us, $3.7 billion, which we funded mainly in the Colombian Stock Exchange. In a year where our stock offer was at the end of the year, in November, in that year, after around 10 or 11 important stock offerings from other listed companies in Colombia. And when the international markets were stagnant because of the European crisis, so we funded this operation mainly in the Colombian Stock Exchange, with participants from the Colombian market, institutional investors, individual investors. We raised $1.8 billion in the Colombian market. And since then, the number of international investors that are participating in our company has multiplied by more than 3. We had, at that point in time, around 140 international investors. Today, we have 550.
And what sort of share of capital do they hold?
Today, they have more than 12% of the company.
Okay.
And this shows how this secondary market in Colombia is working quite fine, and that it's a friendly market for international investors as well. But as Juan Pablo just mentioned, our company and all the listed companies, we're working hard on corporate governance for many years. And not only having a corporate governance code, but improving our corporate governance every day. And complying with the latest improvements in corporate governance throughout the world. So that's what we are constantly striving to have. And I think that's what makes our market more attractive, to have this corporate governance.
Okay, Roberto, perhaps you could talk a little bit to start with about the macro side of this, whether Colombia and the other countries in the MELA region have the kind of policies that encourage investors, or whether they still have some way to go.
Okay, I would like to start by saying that when we look at this, investing in the new Colombia is possible because a little bit of policies of the past, and especially perhaps the first message that I would like to leave you is that Colombia has had a tradition of good economic management. We were the only country in the 80s that did not restructure debts. We continued paying. We didn't have negative growth rates. And I think the one message is that economic policies have had continuity among the different governments. We have not been a populist-oriented economic policy country, and economic management has always been delegated to highly professional economists, like you will see the Minister of Finance this afternoon. The second thing is that due to that, Colombia has had less economic volatility than most other Latin American countries, and the financial sector has been strengthening. There is a publication that you can look, the World Stability Report, Financial Stability Report of the country, and it shows that the banking sector, they did a stress test to the banking sector, very strong fundamentals on the banking sector, and you see the developing, let's say, of the capital markets, and the development and growth of the insurance companies, and especially on the pension fund side. The report also tells something very important for you, investors, and that Colombia has a very strong financial superintendency, a very good regulator, and I think we are sort of leading country in those fields.
Okay. You may have very good policies that are very attractive to investors, but a lot of investors will think, well, here's a very well-run but very small country, and over the other side of the continent there's an enormous country, Brazil, which may not be as well-run, but it's a much bigger market. So, you know, there's more money to be made there. Why should people go your way instead of...
Okay. First, we are a small country, but we are the 28th economy in the world, okay? In size, much more smaller than... much smaller than others. But in the second place, sometimes they say that small is beautiful. Okay, if we have an underdeveloped or to be developed financial sector, prospects are very, very good. I give you an example with the insurance companies that I had. Growth in insurance premiums are twice GDP growth. It shows, you know, that those possibilities to grow in the financial sector, to grow in the capital markets, to grow in the banking sector are very promising.
Okay, let's talk first of all a little bit about that, about the insurance and pension sector. Whoever would like to address this first, the role of the pensions business in providing capital, and the role of the insurance business, and what needs to be done in terms of regulation or anything else to make that move forward. Please do.
Okay. Well, I've had the opportunity to be in the pension system since the beginning, in the 1990s. And I have been a witness of what has happened to the capital markets in Colombia with the growth of pension funds. And this is an important advance in the capital markets. When we started in 1991, I could say that institutional investors were playing a very small role in capital markets in Colombia. And basically, for funding in the private sector and even the public sector, they would rely mostly on banks, on the banking industry. But with the appearance of the pension funds and other institutional investors started to grow as well, and issuing the bond markets started to develop. Public debt started to rely very much on institutional investors. And afterwards, for private debt, where institutional investors became very important as well. And today, we can say that our capital markets, not only in the debt part, but also in the equity part, have developed a lot because of the presence of pension funds. And today, pension funds, we manage around $70 billion, $80 billion, and that's invested in a high percentage in the Colombian capital market. Okay. And so this has given a lot of liquidity to the market.
And, sorry, go ahead.
Yeah, if I may take on your two previous points. One on Brazil, we have a lot of respect for Brazil, of course, and we admire many of the things that have been done in Brazil, particularly in the capital markets. But one of the messages is there's more to Latin America than Brazil. And precisely one of the reasons we're here is Colombia is one of those alternatives and one of those opportunities. And the MILA market that we want to portray is of course, part of that initiative. In MILA, precisely to address some of the issues that you mentioned, that smaller economies face economies of scale problems, and particularly in the capital markets, some of the issues to develop those markets require a critical mass. So countries like Colombia, Peru, and Chile, we face similar challenges to develop more products, more liquidity in the capital market. So by identifying that, what we said was, there's many things we can do independently, but by joining forces, we can probably accelerate the process of development of the markets in the three countries. So that's a basic proposition behind MILA. It's integrating the capital markets of the three countries so that some of the things that need critical mass and economies of scale, we can accelerate the process of development.
Can you just describe a bit of what moment we're in now with the development of MILA, how far integration has gone and what has to happen next?
Okay, well, first of all, MILA is a reality in the sense that it was launched 2 years ago, and the main proposition, which is basically that if you're sitting in Colombia and you're an individual investor, you can buy through the local broker and the local exchange, you can buy securities in Chile and in Peru. Similarly, if you're sitting here in London and you want to access the three markets with a single entry point into one of the three countries, you can access the securities in the three countries.
And
that's happening.
That's happening.
Now, are there challenges moving forward? Of course there's challenges moving forward. Particularly what we want to promote is cross-border trading. And we were discussing earlier about the pension system, for example. The pension funds in Colombia are largely invested in Colombian assets, the Chilean ones largely invested in Chilean assets, and the Peruvian ones largely in Peruvian assets. We need to promote cross-border investing.
Is that happening?
Very, very mildly. It needs to be strengthened, and there are challenges from the regulatory point of view, of course, to allow the pension funds to invest directly, for example, in the other countries is something that is required, and also to have similar treatment. If you're, for example, we have problems of recognition. If you're a country like Mexico, for example, and we want to have Mexico join the MILA, they only allow the pension funds to invest in OECD countries. So if you look, they're not allowed to invest in Colombia or Peru. So these types of challenges need to be addressed.
Okay. And what is, do you see a big role for portfolio investment in driving infrastructure challenges and so on that exist in the countries? Are there mechanisms for that to happen?
Well, as David mentioned, the capital markets have been there to fund requirements in the economy. Through the capital markets, the private sector has raised $30 billion over the last 3 years, okay, both in bond financing and equity financing. So it's a substantial amount of resources. So we believe that both with domestic investors and international investors and a well-functioning capital markets, all the investment needs of the infrastructure sector, mining sectors, etc., may be financed through the capital markets or in a very significant way, also complementing international financing.
I would like to add sort of two issues that I think are very important. Now that we're going to listen to the Minister of Finance and the President, probably they can address it in a better way. The one thing that is very important is we are undertaking our beginning discussions on a pension reform in Colombia. And what is critical is that this pension reform really ends up, and that's what we hope, strengthening precisely the private sector pension system, and this is the big defense of the capital markets. And there are issues to be sort of discussed behind that. The second issue that I would like to add is that really with this pension reform, what has to be solved is a very sort of technical issue that comes about, and is that in Colombia nobody can have a pension if it's not a minimum wage pension. So we have, let's say, problems to try to widen the beneficiaries of the pension system in Colombia. So these are the type of solutions that have to be made under the pension reform, but I don't know if Mr. Bojanini would like to see what are your concerns on that.
Well, you're addressing a very important point. Today, as Mr. Junguito just mentioned, not only a pension in Colombia cannot be at a lower than the minimum wage, but it has to be indexed by the increase in the minimum wage every year. And the minimum wage could increase inflation plus 1 or 2% every year. And there's no securities or no investments that are indexed to the minimum wage. So for private insurers, it's impossible to take a liability of an annuity that is going to increase on the minimum wage, and you don't have a way to invest your reserves in instruments that could give you that return. So that's something that has to be changed, and the government is pretty much aware of that. And we hope that in this next pension reform, this problem would be solved, because I have the belief that Social Security and pension systems, they need to have the insurance industry to participate actively. And you need to throw down the barriers, like this one that I just mentioned, so that the insurance industry can participate freely in a market where they can give a lot of support to the pension system.
That sounds like something that might meet resistance from policymakers, though. Do you think government's listening on that?
For sure, but I wanted to add, one is that it's very difficult for the market to produce a solution to that problem. So I think it's an issue, and the message here would be that it be treated on a regulatory front rather than on a market solution. And the other issue here is that because of the age of the population in Colombia is still very young. So the growth of the middle class and the prospects for consumers, et cetera, are great in the next 10 or 20 years. And this is the period where they're going to be accumulating the money for the pensions. But we need to do the reforms soon enough so that when they retire, they will have the scheme to protect their pensions moving forward. So it's very important that we anticipate this. Of course, this is long-term planning, and many times policymakers will not address issues that are 20 years down the line. But we need to develop the market for that today so that in 20 years' time, this is going to be already working.
Okay. I'll ask another quick question, but I'd like to take some questions from the audience as soon as you have them. But just before that, just one thing I wanted to ask quickly, Juan Pablo. Anybody who's been following Colombia recently will have heard of the Bolsa scandal, a very large brokerage that had a big chunk of the market that imploded. Amid all kinds of accusations. One of the things that you're all here to talk about is good governance. Do you feel that has been cleaned through? Are there still issues to be resolved there? What kind of legacy is that left?
Okay, no, thank you. Well, first of all, I would say that the process of intervention and, let's say, cleaning up the problem was done superbly by the supervisor, and basically a potential systemic risk was contained very effectively. So in a matter of 2 weeks, everything was cleaned up in terms of the operations that affected the marketplace, and investors started to receive their assets being transferred to other firms. Of course, the fraud problems that were found in a firm like Bolsa were very, very large, and they are still in the process of being resolved, but that has now moved to the judicial system, which is the one in charge of prosecuting fraud. Now, in terms of corporate governance, of course, it leaves lessons. Issues like the separation and the independence of risk management committees, for example, are to be taken seriously. And you cannot have independent members in the firm. You have to have independent members for real. So I think there's lessons, like in every crisis, there's lessons for regulation, there's lessons for supervision. But I think that the authorities and the industry is taking note and moving forward.
Okay. Right, I'll take some questions now. There's a hand raised over here towards the back. Could I ask, when you ask a question, please, first of all, tell us who you are and keep the questions short, if you could.
Okay, thank you. My name is Luis Carlos Niño. I work for Thomas Murray. One quick question. On the back of the integration of the stock exchanges in Mexico, in Colombia, Peru, and Chile, do you see any future for the development of a central counterparty to serve that market?
Absolutely. I see you share my obsession with capital markets being relevant for the countries and for the region. I think it's a very obvious step forward, but we have to go step by step. So one of the ways we can serve these markets better and participants in these markets is to have infrastructure in the market that ensures the safety of transactions in the three countries and cross-border investing. So that's definitely something that could be addressed moving forward. There's no specific talk right now about it, but to have a central counterparty for the three markets makes all the sense in the world, in my view.
Follow-up question on that sense, if I may. Is there also the possibility of integrating the central security depositories in the three markets as well? If we're talking about economies of scale at some level, we've seen the process of target 2 securities in Europe. So I'm just wondering, is that also a possibility that you'd like to consider?
Absolutely. I think that the main message here is that the ball is rolling and that the process has begun. We know maybe where we want to go, and we don't know yet is when we'll reach that point. But financial integration is about making transactions in these three countries in a much more effective way, in a safer way, and what serves the industry better. So things like you're mentioning definitely make sense.
Here at the front, we have a microphone. Oh, sorry, we've got a microphone in hand. Please go ahead.
My name is Carlos Jaimes from JP Morgan, and my question is on the pension space. Is there any interest in funding infrastructure or alternative investments?
Okay. Of course, there is an interest. Today, pension funds are, for risk purposes, are more interested in funding the operation of infrastructure after it has been developed. Because in the past, we have had a risk that, as Mr. Andrade was talking in the former panel today, government is trying to speed up the process of building infrastructure and to lower the risk of building infrastructure. And when that is achieved in Colombia, and we have the certainty of, as pension funds, that an infrastructure project is going to be constructed in the time for which it was programmed to be developed, and at the cost at which it was contracted, then institutional investors can participate with a lower risk in this kind of projects. For the time being, and because of risk purposes, and because we are managing money from people that are expecting to retire in some years, we have to be very careful. So we like to participate only after infrastructure is built in financing operation.
I'd like to add something on the role of insurers in the infrastructure work. the financing and the construction has to be supported by guarantees or by surety bonds, which is the guarantee that the construction is going to work all right. That requires not only a strong insurance sector in Colombia, but especially, we went yesterday with some of the insurers to Lloyd's, especially reinsurance, because it's so large, this type of investments, that the support of the international community, and here in London, a very big role for the success. I would like to leave that sort of commercial.
And how much of a role are they playing now? Is it?
No, they do so. I mean, every time you have, the construction of a road work, you have to guarantee that the construction is done on the right, proper way exactly, and that the constructors meet, the obligations. And that's usually supported by surety bonds, by insurance support to make it feasible. It's not only the financing.
Okay. Yeah, I think that as a general statement, both pension funds and insurance companies are ready to finance and take the risks that can be transferred to the financiers in a very readily fashion. And I think in the amounts that are needed in Colombia moving forward in the next 5 or 10 years for all the investment that is required. But I think that what Mr. Junguito is saying is that you need the specific projects then to see what the risks are and to try to quantify them, and then get the assessment of what the local industry can take and what can be taken to international financing.
Is your assets in ING, are those operations ready to take an active role? Are they ready doing that?
Oh, we have a very active role in investment in many areas. But particularly with infrastructure in Colombia, we need what Mr. Junguito just mentioned. And with that kind of securities, perhaps then pension funds could participate, diminishing the risk that is underlying the construction of infrastructure, particularly in Colombia. In the other countries, for example, in Chile, we don't have that problem, or Peru. So it's something that Colombia has to develop the ways to control the construction risk.
Okay. We had a question here at the front.
Yes, José Luis Manzano, Integra Capital. We see Colombia very active in the UK. Have you considered integration, cooperation, or an alliance with the London Stock Exchange for things like double listing, simultaneous offerings?
Well, it's a very good point. Actually, there are some companies listed here in London. Of course, for Colombia, traditionally New York has been a more, let's say, obvious destination, but I think, as you're right, there's an opening up to England, and particularly yesterday we had a tremendous day of meetings. The 20 or 22 companies that came with us from the exchange to visit investors. We had more than 200 meetings yesterday with investors, 1-on-1, 2-on-1s, 3-on-1s. So we had some had 5-on-1s. So it was really a great reception by the investor community here in London. So definitely there is a case for strengthening those ties here. In terms of issuing jointly, both in Colombia and in London, or Colombia and New York, we've made tremendous progress over the last year or so in modifying the regulation and the way let's say the IPO prospects are being filed in Colombia, so that you can do a simultaneous issuance in two countries. We just tried it with Cementos Argos a couple of weeks ago, Colombia and New York, and it worked very, very well. So I think the avenue is there for further issuance in New York and London.
Any other questions? Yes, we have one over here.
Yes. This is a two-sided question, one from the issuer perspective for Mr. Bojanini, and the other from the framework perspective to Juan Pablo.
Can you tell us who you are?
Federico Suarez from Citibank. David, those 540 plus investors you have in your company, what are they asking from you as an issuer in terms of advances going forward? What they would like to see from you as a company, as an organization that is expanding out of the reach of Colombia? And for Juan Pablo, in terms of framework architecture, what are those investors that are investing 15% of the total market every day in Colombia, what do they want to see from the exchange, from the regulation, from the investment community in Colombia?
Okay. What we observe in our conversations with the different investors is that, well, they are very interested in our expansion plans and how are they coming out, how are they working, and we are continually, they're asking us questions of what were our initial plans and how these plans have been developing. They like very much our geographical diversity, because being present in several countries at the same time, and this is something that is common to several Colombian issuers today, is something that investors like, because it's not only the risk of one country, but it's more a geographical diversity, and which makes them more comfortable. And well, they are asking continually how the markets are developing in each one of the countries. So they have a very close supervision of the results that we are obtaining in the different markets, how we decide on where to invest and which countries, and the reasons why we choose a country, and the type of companies where we want to invest. I think that's the things they care the most about.
Yeah, on the other part of the question, which is basically what do investors want to see when they come to Colombia, or would want to see to invest more in Colombia, I would say two things. One is liquidity. I think that one of the focus of what we're trying to do is to enhance liquidity with the companies that are listed in the marketplace, to increase the size of the issues, to increase the float. We're working with many of them, and I think in the last few years successfully so with many of them. And we're working an initiative with the authorities to create market maker programs in Colombia for specific securities. So I think we're going on that track, and of course there's a lot to go when you compare to larger markets. Colombia still has a long way to go, but I think if you look at the last 5 years, the evolution has been tremendous. So liquidity, I would say, is one objective that we need to work on and continue working on, and getting the support of all participants in the marketplace. And the other one I would say is safety of transactions, or security of transactions. There's an expression in our industry which is to be an eligible market. To be an eligible market for international investments means that you basically meet international standards in terms of how operations are done, how the securities are safe kept, etc. And there's an important step moving forward there right now in Colombia. There's a change in the regulation to introduce custodians. Custodians in the value chain of the securities market are very important to ensure that my money is safely kept with a specific custodian who does not have any conflict of interest with my money or my intermediary, and will safe keep my security. So introducing the custodians in the value chain, I think, is a great step forward for the Colombian industry. And I would like to note, as David was mentioning, there's $85 billion in the pension funds in Colombia, but there's $100 billion in other mutual funds in Colombia. So all this industry is really there to continue financing the growth of the country, and with a better working capital markets, it'll definitely work that way.
So just go back, David, to what you were saying about banking sector. How there's been a certain amount of pressure from the government, hasn't there, recently, to lower margins, to how margins need to come down. Do you feel that you're operating in a fully competitive sector? Are the barriers to entry that might be lifted and bring in a bit more competition?
No, it's quite competitive. And there are really not that much barriers of entry, because, well, when the pension fund business in Colombia started, we had like 18 participants, which was a lot for the size of the Colombian market. There were lots of expectations, and the market has been consolidating itself throughout the years. Today, we have 4 or 5 participants, which are a good number for the size of the Colombian market. But there's always the opportunity for new entrants. And I think the rules of the game here are very clear, and I don't think there are any barriers for new entrants. And we have experienced in some other countries where the regulation is very similar, how new entrants are coming into the pension industry.
I'd like to make one comment regarding insurance, but also competition in entry. In insurance, half of the companies are foreign-owned companies, half are Colombian companies. We have about 26. But the point that I wanted to make is that there is a tremendous interest in Europe, mainly of European companies wanted to buy, let's say, insurance companies or financial companies in Colombia. I think we have very clear rules of the game, easy entrance, and there is a marked interest in that. We know from what's going on in the market.
Let me just add, on Tuesday we were in New York doing a similar venue, and the Vice Minister of Finance was with us there, and she had a very nice chart with 32 requests for new licenses in the financial industry right now being processed at the Superintendencia Financiera. Not all banks, of course, but in all the financial licenses, there's 32 new potential entrants into the marketplace. So it just gives you an idea of the dynamics of the system.
And are those mostly local organizations or international?
Both. Well, you have to have a local
Sure.
company doing there, but I think both. You would see both. Yeah.
Who has the microphone? Question over here. Sorry? Somebody already has the microphone? No, there we are.
Here it is. Hello, I'm Hayden Warren-Gash. I'm a former British ambassador to Colombia and now a director of a consulting company. Don Roberto, I share your dismay and not to mention consternation about the monofocus on Brazil. So I may make a comment first. The motto of the company of which I'm a director is Beyond Brazil. However, I have to say that up till now it has been hard going. That monocolor, that monofocus has existed, to some extent still does exist. And I congratulate everybody here today that this is beginning to change. But I think it's still only beginning to change. And therefore my question is, in terms of the new Pacific Alliance that's been created, to what extent do you hope to use the political synergy from that to move the spotlight further west?
Probably what I can say is this Pacific Alliance countries, and we heard it today from the Minister Duque, what we have in common is that also the views towards the world, towards integration, but the economic policies are very similar. We are countries that are market-oriented economies. We have independent central banks. We have opening trade systems, and the Pacific Alliance has grown precisely because the sort of the economic strategy of the different countries are very, very similar, and that's what makes them so strong. So I think if they work towards the Pacific, they may work also towards the West, because it's really the economic structures and the views of the world what are most important.
I would like to add something, but first to say that the political aspect of the question will leave to President Santos, who will address us in a few minutes. But I think the effort here is very important. But you have to understand that Latin America has not been very integrated amongst itself for many, many years, as opposed to Europe. I mean, in Europe, you have many, many years, 60 years of an integration process. This integration process is just starting in Latin America, so we have to give it time. But I think that all of the things that are happening today, starting by aligning the political discurso, is very important, because when you have the president so aligned in trying to create an integration, everything filters down. So you have trade integration, you have investment integration, you have financial integration, and you have all other sorts of economic integration. But it's going to take time. And again, it is not governments or decrees that create integration. It is really the private sector by doing business. So this is just beginning. And we are very excited. In the case of our financial integration in terms of MILA, there's a lot of criticism that, you launched this 2 years ago and there's very little cross-border trading. Well, of course there's very little cross-border trading because we just started. But we have 3 banks that have already positioned themselves in the 3 countries as regional banks. And they're developing their strategy, commercial strategy, risk management strategy, investment strategy, issuer services that are going to be tailored to the investors and to the issuers in the 3 countries as a single organization. So 2-3 years' time, we're going to start seeing more product offering precisely for investors interested in Latin America beyond Brazil.
One of the things that you hear increasingly is that investors, when they once looked at emerging markets as one group, now they're having to look much more closely at each individual market. And as that happens, as people examine the markets and policies and so on in Latin America, you talk about Latin American integration, but isn't it more the question that you will get a Pacific rim looking across the ocean towards Asia and another side of Latin America pursuing a different path, and rather than integrating, becoming rather more separate? Is that possible?
Well, I think that the notion here is that we'll work with anybody who wants to work in this view. So there's a political view, there's an economic view, and we're definitely open to inviting new countries that want to join this vision. So I think that the larger the scale, the better. But we also have to focus on doing things right with the ones that are already working there, so that this goes from a declaration of intent to reality.
Another question? Did I see a hand raised? Yep, over here.
Hello, it's Paul Hollingworth from BBE Securities. A question for Dr. David. Is it not the next stage after regionalizing, sort of moving more globally, and given current asset valuations, wouldn't it make more sense for operations to be picking up assets in Europe than the other way around?
Well, in our case, particularly, this regional Latin American or multi-Latina market was our natural market. We have less barriers to invest in the neighborhood because of language barriers, cultural barriers, geographical proximity. And we have still big challenges in the region before we think about expanding more globally. We think that we have our strategy is to have a complete range of financial and insurance products for all of our clients in each one of the countries where we are present. And today, we are aiming to develop those products, having only in the pension fund industry, you have more than 16 million clients to whom we can offer insurance products, wealth management products. So we have a lot of work to do in the region before we think about expanding to other countries, because then we will have something in midway development, and I don't think that's a good strategy. We want to consolidate what we have in the region, and there's a lot of work to do.
Is part of that work fending off advances of foreign banks coming into your market? No, is part of the work you have to do, does that involve fending off the advances of foreign banks that are coming into the market? Are they making inroads?
Foreign banks some of the foreign banks are leaving the market today, and we're taking their place in some cases. But also, banks from the region want to expand in each one of the countries. So we are observing many Brazilian banks and other regional banks expanding in Latin America, while European banks are leaving the region. So it's an interesting situation where the world is changing, and what is not a good opportunity for a global bank could be a great opportunity for a regional bank.
Okay. I think we take maybe one last question. Anybody else want to ask us anything? Yes, we have one down here in the middle. Do you have a microphone?
Thank you. Thank you. I'm Nigel Lewson, Chairman of the British and Colombian Chamber of Commerce. I was just going to make an observation on which you might like to react, which is this, that given the story of a new Colombia we're hearing and the development of the capital market, it would seem that from a point of view of many investors from, may I say, the UK and Europe who've become a little disillusioned with their investments in what used to be called blue chip stocks in the UK, that the emerging markets represented by the likes of Colombia could present a superb opportunity for future business development between London-based investment management firms and the Colombian insurance industry, for example. Do you see the new Colombia as being a place where venture capital and retail funds are likely to grow significantly?
Yes, please.
Well, absolutely, and I think that, again, part of the reason we're here is precisely to build those links and continue in this direction. And if you just look at the world for the next 20 years or so, countries like Colombia, if we continue to do things well, will most likely grow at a faster pace than the average, than the world economy, and probably than the average country in Latin America. So if you want to diversify globally, investing in countries like Colombia definitely makes sense. And emerging markets are going to be receiving a massive inflow of capital over the next 20 years just because of the rebalancing of economic size around the world. So for the retail investor and for the institutional investor in the UK and elsewhere in the world, it makes sense to generate these ties with countries like Colombia, and we definitely see that happening. The big challenge that we have is to produce sufficient supply of investable assets for you to come and invest in, because we are also aware that there are many options around the world. So if we don't do things right, or if we don't supply the investable assets, then you'll have to invest somewhere else. But we definitely want to work very hard in creating those channels and those avenues so that investors here can have greater access to Colombia.
Are those assets being created?
Yeah, what I think really is that we are becoming too attractive to an extent, and what we have to really focus on is how to minimize the downside risks of the country, how to manage this, let's say, new income by the government and to channel resources correctly, to continue following the right economic policies. I think Colombia is becoming one of the most attractive countries for investment. I have a double hat. I'm representative also of Goldman Sachs in Colombia, and I see the amount of interest from the whole world in investing in Colombia. So we have to keep on being sort of the good students of the class. And
David, would you like to add to that?
Yeah, well, we have observed lately how many family industries are becoming public. And that's a great opportunity for new investors because, with the growing middle class in Colombia, many family industries have to take a leap and grow to take a big step and grow in order to be more active in this growing market. And many of these family industries have understood that the capital markets are a good way to fund their growth. And they have also understood that taking that step means to have corporate governance and to have a more transparent management and everything. And this is also happening in Colombia.
Okay.
So I think as more foreign investors and institutional investors come, this process is going to accelerate a little more.
Okay, everybody, ladies and gentlemen, thank you very much indeed. Gentlemen, thank you for your time. Excellent panel, very interesting comments.